Hello?
Hello, ma'am. The company sale is decreasing. I think we have to find a strategy to overcome this before it's too late.
Is that so? Never mind. I'll call you later.
Hello? Whoa, where am I?
Welcome.
Who are you?
Come, have a seat.
Don't be afraid of us. We are here to help you since you called us.
It seems like your business having a problem. Would you like to join our trade association?
What is this organization for? Are you really guys gonna help me?
Oh, it does help my business, and I'm sure it gives benefits to yours too.
Now, a trade association is
Section 53, subsection 3 define the trade association to be any association of person, of partnership, or person and partnership form with the main object of safeguarding or promoting the business of its member or developing and advancing the problem of its member.
Yes. Basically, it is a group of business that work in the same industry and come together to help each other. They share information, solve problems, and make rules to keep the industry fair and professional.
But for the purpose of income tax, a trade association is deemed to be a body of person and not a partnership, which means a trade association is taxed based on a single entity instead of dividing the income among its members, like a partnership.
For example, if it were a partnership, the income will be split among members and paid tax individually. But as a body of person, the trade association will calculate and pay its own taxable income, like National Chamber of Commerce and Industry Malaysia.
But wait, how does the organization be considered as a trade association? Does any group that form together can be considered as a trade association?
Alright, for an organization to be considered as a trade association, all members must run a business, meaning that the group is made up of businesses owners, not employees. For the purpose of association is to protect or promote the businesses of its members, also to develop or advance the profession of its members.
Oh, then is the association a resident of Malaysia?
Yes, it is because the association's decision-making activities are conducted in Malaysia, and it will be considered as Malaysian resident for that year and beyond, unless shown to be otherwise. And since the trade associations are treated as a body of persons, their tax rates are similar with individuals.
Therefore, the trade association pays taxes based on scale rates, which means the more income they earn, the higher the tax rate is.
And for non-resident, it is taxed at
Flat rate of 30%.
So does that mean the calculation for tax for the trade association is similar to of individual?
trade associations can earn money in two main ways, which are from business income and investment income. The income that gains from the business activity is taxable as a gross income and would close its account on 31st December. If an association trades with non-members, the income is taxed separately, while the equipment and machine used for the activities can get a tax reduction. That is called capital allowance. Next is the investment income,
which specifically specified under Section 4C and 4D, such as rental, dividend, and interest.
For donation, they are treated differently depending on the purpose, such as a special donation, which is a money received for a special purpose.
Like alteration, repair, and improvement of premises. This will be treated as a capital receipt.
Then, for subscription, the general donation is received for general reasons, such as those collected for festive events, are classified as income. However, any cost related to donation can be deducted from the taxable amount.
Oh, I see. Now I understand. Basically, the income of trade association is gained from the business activities such as member subscription, seminar fees, and trade association activities that will minus all expenditures incurred such as depreciation, consultation fees, and any expenses in the statement of profit or loss, like in the table provided here. With this, we can get 900,000 in the statement of profit or loss. So, let me go into details. Referring back to the statement of profit or loss, the total of income, which is from the member subscription fees of 1 million, seminar fees of 600,000, and trade association activities of 400,000 is 2 million. Then, less with the expenses that contains of depreciation, employees' remuneration, consultancy fees, rental for seminar hall, food for seminar, transport and stationery will be 1,100,000. To calculate the statutory income, the income gained from the business activities will minus all the expenses that incurred in order to generate that income. For example, rental of seminar hall, which we minus from the seminar fees received. Then, included in the expenses, we also have common expenses, where we will get the adjusted income after minusing it. Lastly, we will minus the adjusted income with the capital allowance before arriving at the statutory income. Now, this is how you will calculate the statutory income for all the business sources. For member subscription fees of 1 million, will less the common expenses of 100,000 and less the common capital allowance of 2,500. The statutory income of 650,000 will be exempted. However, the statutory income for seminar fees of 190,000 and trade association activities of 160,000 will not be exempted. Now first, we must remember that common expenses and capital allowance must be allocated between exempt income and non-exempt income using the formula of A times B divided by C and D times B divided by C. A is a common revenue expenses while B is the gross income of one of the business income, C is the total income of business sources, and lastly, D, the common capital allowance. After calculating all of these, in the end, we will sum up all the non-exempt income and get the chargeable income that will be taxed.